Everything up for the day on Friday. That's our two stock indexes, gold and bonds, plus an up week. Green up candles on everything too. Going to have an interesting training during the course of covering our 4 ETFs on backtracking and how important that is for your success. Trust but verify. Okay, let's jump first into the S&P 500 on the weekly chart as we always do. Finish the third week of nice up movement on the S&P 500. That is following, 2 weeks following that first week of the weekly vertical crossover going up. And again, price movement well above the weekly trend line, just above the 2-day trend line on the S&P 500. We see the derivative oscillator gaining upward momentum, price percent oscillator heading up almost as strong as it had been over the course of the prior week. Things are looking nice as far as stocks go. Up for the day, 0.15%. We go from the weekly to the 2-day. That's where we see a little bit of the weakness we've been encountering. We did finish drawing the latest candle on Friday. It is a red spinning, red doji almost. Means indecision tending down. Price movement is above that 2-day trend line, just barely, and decently above the weekly trend line. Derivative oscillator, again, lost some momentum. Price percent oscillator, not quite flat, has lost a little of its spark. But again, we've seen this happen as we go back in time over this last run up, and we've seen the market digest some of the upward gains, and we'll just see what's going to happen here. But that's where we are on the 2-day. We go to the 4-hour, and that is where we see we had a day and a half of down movement and then a bit of a recovery in the afternoon, moving right there, laying on the 2-day trend line. Derivative oscillator still gaining downward momentum. That price percent oscillator is still headed down on the 4-hour chart. What's it going to do? Well, the 2-day chart's still decent, and the weekly chart in particular is quite decent. And of course, when we talk about backtracking, that is where you go back in time and you see how well your theories have worked. Now remember, theories work in stock trading until they don't work. When you come up with something such as, remember what we talked about yesterday, how if you used for your practice trades our gold weekly chart and went back over time, how it would work again and again and again and again, getting you out of gold and into gold, or shorting gold and going long on gold over and over and over quite beautifully. In fact, you can only find a couple of instances where it didn't work. Otherwise, it's absolutely gorgeous. Well, means gold's pretty easy to track on our chart, isn't it? So you should be practicing that. You should be practicing long trades in gold, whether they're on an inverse fund, which makes money when the chart goes down, something like GLL, or on GLD. And how do you best practice those? We've got a great easy tracking method video that I will put into the show notes today. So if you're a subscriber to either our YouTube channel or even better, chartingwealth.com, and you get our email in your inbox every day, what you will get is you'll see a link there under the link to the show where you can get that special training, because freestockcharts.com has the ability for you to easily track the entry point on your trade and how well it does. And you can let it run long term and just see how good it gets. That's the beauty of backtracking, and also using various time frames, such as the weekly, the 2-day, the 4-day, the monthly, the quarterly. Remember how beautiful our quarterly chart is for the S&P 500. When you start to looking at long-term investing, again, practicing that. And of course, we'll go to the S&P 500. We keep up with that for you. But again, back over time, again and again and again, it has worked so beautifully. But for the Trump effect, that's the only time through the last 20 years that we can even go back. It has worked masterfully, getting you in and out of the market on the right time. So again, practice, trade these things, pay attention, live, learn, practice, and document. So I want you to get that special training. We will have it available for you. And again, don't forget to buy our book. That's where we are on the S&P 500. Let's go to the NASDAQ 100, represented by QQQ. Of course, it's going into its, well, we're in our second full week after the vertical crossover 3 weeks ago. And that was on the weekly chart, 5 weeks of nice up movement. And of course, we have a big green up candle for the week. And we see the derivative oscillator gaining upward momentum, price percent oscillator heading up quite nicely on that weekly chart. We go to the 2-day. And again, we had 3 up candles representing 6 days of strong up movement. Bit of a pullback over this last 2-day. It is a doji, not as a strong a down candle as we saw back on the 29th, which was a solid red candle with a wick on the bottom. This is a doji, so you have some movement on top and the bottom. Real close to a doji means lots of indecision, tending down. Derivative oscillators lost some momentum since the 6th and the 6th of January, that 2-day candle. And we see the price percent oscillator going a little flatter, still heading up. Not super strong at this point. We'll see how all that shakes out on Monday. And what do we see going on as far as the 4-hour chart? Had a day and a half of down movement, bit of a recovery in the afternoon. Again, the Q's up for the day, 0.20%, closing at 168.56. Now, let me get into a question that, and I always like to take questions from you guys, so don't ever hesitate to email us, cw@chartingwealth.com. Question about after the weekly vertical crossover, and we had 2 days worth of down movement. The minute that green candle finished forming, was there a potential jumping in point on that second candle instead of waiting for the crossover the next day? There are always possibilities for jumping in. You don't have to wait for a crossover. Again, what do we encourage you to do? Practice, because that's what we do here, not a stock calling service. We want you to practice. Every ETF has its own personality and works a little differently from others. And I want you to experiment. You come up with ideas, no matter how off the wall or crazy they might seem. If they work, my friends, and they work time and time and time again, remember, those who've been with us a long time, how for 2 years, the 4-hour chart on gold was a total trading chart. It worked over and over and over again. And by that, I mean, if that 4-hour chart crossed over, it on the 4-hour chart crossed over on the price percent oscillator, it was good to go for 2 or 3, 4 days. And when it crossed back over, you could short it. When it crossed over going up, you could go long. And it worked over and over and over again until when? It didn't work anymore, which I guess was about February of last year. But again, things will work for a certain season. And as long as you find it and it works, practice, trade it, learn it, and learn to try to recognize those things, okay? Those things are very important. So what are we waiting to see? Well, the derivative oscillators gaining downward momentum on the Qs. We see that the price percent oscillator not heading down at the same strong angle, but still in a down mode. It did end with a doji for the week, which means indecision tending up. We'll wait and see how things shake out on Monday, just like the S&P 500. Okay, going back to the weekly chart, heading on to 20-year bonds. 20-year bonds have been a confirmed up move since the 30th of November. Can you believe that? That's on the weekly chart and moved up for many weeks until they've been moving sideways since about the 4th of January. Just a lot of sideways sliding. Again, tending up a little bit over the last few weeks, not super strong. Derivative oscillator losing upward momentum, but that price percent oscillator, our main indicator, is heading up. We go from the weekly to the 2-day. What do we see there? Trying to cross over, going up. If that happens over the course of this next week, that can, of course, offer opportunities for jumping into an up trade on TLT. We'll let you know if and when that crossover occurs, but a nice strong up candle, the strongest green up candle we've seen in quite a while. That's the way TLT 20-year bonds ended the week. And what do we see on that 4-hour chart? Sort of rocketing up since it bottomed out back on the latest bottoming out of it, back on the morning of the 4th of February. So we'll wait and see what we see if bonds shake out and really start moving up again. That's where we are on bonds. Lastly, we go to gold. Gold up for the day. Oh, bonds, by the way, up 0.43%. Gold up 0.38%. Now, gold, we talked about that weekly chart being a total trading chart, a magical chart. Once it crossed over going up all the way back on October the 5th, and of course, the first jumping in point somewhere around the opening, and again, don't like to use Heikin-Ashi candlesticks. Those of you who understand them know they are calculated differently. If you hadn't listened to our Heikin-Ashi training, about 105,000 people have. You can find it at the website. Please go to chartingwealth.com under training. It will explain everything to you about these average pace, which is what Heikin-Ashi means in Japanese candlesticks. And of course, somewhere around the opening of 113 to a high so far of what? I guess the high was reached maybe on Friday, the 1st, or during that week sometime, 125. Let's see if it got any higher our way. Yeah, 125.23. That's about $12. Is that nice enough for this period of time since October to February? I would say that's pretty sweet as far as a run-up goes. So let's talk about where gold is now. Up for the day, 0.38%, as I said. Not as strong a week as the prior week, so really a sideways slide. Derivative oscillators lost a little bit of momentum. The price percent oscillator still heading up quite nicely. We go from the weekly to the 2-day, and the 2-day is trying to cross over. Well, it's pretty much laminated. It's not crossed over. It's really, I told you, the sideways slide has been going underway now for about 8 days. And we see that the derivative oscillator has gone negative and pretty much laminated there. A lot of indecision. We have 2 dojis, a red one followed by a green one over a 4-day period. So don't know what gold's going to do on that 2-day chart at this time. Maybe it'll break out on the way up and possibly give you an up trade to practice over the next week. We shall wait and see as we delve from there into the 4-hour. Yes. Over the course of the day on Friday, of course, 2 up candles. Will gold crossover going up on the price percent oscillator? If it does where it currently is and starts to move up, you could have a jumping in point. You could have a jumping in point as early as Monday afternoon, maybe. So let's keep our eye on gold over the course of the week and see if we have a jumping in point on the way up. If not, we'll just keep our powder dry. Remember, first rule of trading, don't lose money. You lose money, you'll never have money to make money. Second rule of trading, make money. Remember, we are trend followers, my friends. We are not gamblers. We are not risk takers. We are risk minimizers. And the best way to learn this is to listen to us every day. Buy our book, Charting Your Way to Wealth. You can find a link in the show notes to purchase it. And if you really want to help us out and you appreciate what we do, become a Patreon member. You get all sorts of special free stuff at any level that you become a Patreon member. You get, of course, our short chart training. You get our quarterly chart training. You get all sorts of other things. Depending on your level, you can get the book for free. You can, in fact, and you also, at any level, you get the Q&A that we have every month where we get together with all of our members and take questions for about a half hour discussing everything you're interested in. And then I take the top stocks and ETFs you want me to review to give my thoughts on, and I talk about those once a month. So all those things come to our good friends who are the Patreon members and all those special trainings. God bless, my friends. All the best. You'll see how to become a Patreon supporter also in the show notes. God bless from the whole team here at Charting Wealth World Headquarters. Keep the faith.